Welcome back to Investing Talk Podcast. Today, we're looking closely at Nike. Based on some information you shared, you're aiming for a clear, concise picture of what's happening with the company right now. So we've distilled the key insights from recent analysis. Our goal is to, unpack this so you gain a solid understanding of the current situation.
Absolutely. And it's a really interesting time to be looking at the company, given some of the recent market movements.
It is indeed. Let's jump right in with the headline. Nike's stock price is currently at $55.58. You'll notice a significant drop in the last day, around 14.44%. That's a big move. What could be the primary drivers behind this, looking at the data?
Well, a drop of that magnitude often stems from a combination of factors. From a technical standpoint, as some of the material shows, the stock is trading considerably below its 52-week high of $123.39, and its low is $70.75. So this puts it in what analysts often describe as, bearish territory.
Right.
Adding to this, the increased volume of shares traded recently suggests a lot of activity, likely in response to this price decline.
Okay, let's consider this bearish territory idea for a moment. Technically speaking, what does it really tell us when a stock is trading that far below its highest point in the past year?
Well, it indicates sustained selling pressure over the longer term. That 52-week high serves as a marker, and being significantly below it can signal a shift in how investors view the stock's prospects.
Hmm.
The lower end of that range, $70.75, gives us an idea of the recent bottom. But if the price continues to trend towards or below that, it can create further negative momentum.
That makes sense. And the higher trading volume, is that simply a lot of people selling off their shares or something else?
That could certainly be a contributing factor, yes. But high volume generally signifies increased interest overall. More shares are being exchanged than usual. This could be due to larger institutional investors adjusting their holdings, traders reacting to the price action, or potentially some new information that has spurred activity. In this case, the significant price decrease is the most likely catalyst.
Got it. Now, the information mentions moving averages and the RSI, even though we don't have the specific numbers here. What's the general implication if a stock is trading below both its 50-day and 200-day moving averages?
When a stock price consistently remains below both its short-term, that's the 50-day, and long-term, the 200-day moving averages, it's generally viewed as a strong sign of a downward trend.
Okay.
The 50-day average reflects more recent price momentum, while the 200-day average provides a broader picture. So when the current price is under both, it suggests that both short-term and long-term sentiment are, well, leaning negative.
Understood. And the Relative Strength Index, or RSI, a sharp drop like this often pushes it into oversold territory, below 30. Why is that something we should pay attention to?
The RSI is a tool that helps gauge whether a stock might be overbought or oversold. Think of it like a gauge of momentum. When it dips below 30, it often suggests the stock has declined quite rapidly and could be due for a temporary bounce back or maybe a period of price stabilization.
A potential bounce. Okay.
Yeah. But it's important to remember that a stock can remain in oversold territory for an extended period, especially if the fundamental reasons for the decline are still, in play.
So that gives us some insight into the technical picture. Let's shift our focus now to the fundamental factors. The sources indicate that global market conditions are having a significant impact. We're talking about things like the war in Ukraine, ongoing shipping disruptions, currency fluctuations, inflation. How do these broad issues specifically affect a company with Nike's global reach?
Oh, these global headwinds create a really complex set of challenges for multinational companies like Nike. The war in Ukraine can disrupt supply chains, dampen demand in the region, and potentially in connected markets, too.
Right.
Persistent shipping issues increase their transportation costs and can cause delays in getting their products to consumers.
Hmm.
Currency fluctuations can have a noticeable impact when Nike converts its international sales back into its reporting currency, usually dollars.
Hmm.
And crucially, inflation affects both Nike's production costs and consumers' willingness to spend on non-essential items like athletic wear if their everyday expenses are rising.
Right. It creates a kind of domino effect. And it's not just those specific events, but also the broader economic uncertainties and geopolitical tensions that can make consumers more hesitant to spend and create instability in supply chains.
Exactly. When the overall economic outlook is uncertain, consumers tend to tighten their belts. Geopolitical tensions can create instability in various markets, impacting Nike's ability to operate smoothly and forecast future demand accurately. It just adds layers of difficulty.
Now, let's zoom in on Nike's core business. They are obviously a dominant player in athletic footwear, apparel, equipment, operations across numerous regions. Their strategy hinges on continuous innovation, powerful marketing, and a growing emphasis on selling directly to consumers, their DTC channels, through online platforms and retail stores. How are these key aspects holding up in the current environment?
Well, Nike's commitment to innovation remains a significant advantage. They consistently introduce new products and technologies that can generate consumer excitement, like the Air Max Drain mentioned in the notes.
Okay.
Their marketing is also, frankly, among the best in the world, helping them maintain a strong brand identity. The direct-to-consumer approach is particularly vital. It gives Nike greater control over its brand image, allows them to build more direct relationships with customers, and, importantly, potentially achieve higher profit margins compared to relying solely on wholesale channels.
Higher margins, right.
But even with these strengths, they are not immune to the broader economic pressures we've discussed.
Let's examine their recent financial health then. Over the last 12 months, their revenue is $47.82 billion, but there's been a year-over-year decrease of 7.29%. That seems notable.
It is.
Their net income stands at $4.51 billion, with earnings per share at $3.01. They maintain a profit margin of 9.43% and a strong return on equity of 31.93%. Their debt-to-equity ratio is 0.85, which appears manageable. What are the key insights we can draw from these figures?
The decline in revenue is definitely a point of concern, as you noted. A 7.29% year-over-year drop suggests that the challenges we've been discussing are indeed impacting their sales. However, their profitability remains relatively robust with a healthy net income and that 9.43% profit margin. It indicates they are managing their expenses reasonably well despite the sales dip. The impressive return on equity, over 30%, suggests they are effectively utilizing shareholder investments to generate profits. And a debt-to-equity ratio of 0.85 indicates a healthy balance between debt and equity.
So not overly leveraged.
Right. So while the revenue decline is a red flag, other aspects of their financial health seem pretty sound.
So when we consider the potential red flags and their strengths, the revenue decline stands out. The ongoing reliance on wholesale, even as their direct-to-consumer segment expands, is another factor maybe?
Potentially, yes, from a margin perspective.
But on the positive side, their brand strength remains exceptional, and they possess the financial flexibility to invest and provide dividends. How do these opposing forces weigh against each other?
It's a careful balancing act, really. The enduring strength of the Nike brand provides a significant advantage and a foundation for future growth. This brand loyalty can help them weather economic downturns more effectively than maybe less established competitors.
So,
Their financial flexibility is also critical. It enables them to invest in innovation, marketing initiatives, and their direct-to-consumer channels, which could be crucial in reversing that revenue decline over time. While the reliance on wholesale has margin implications, it also provides a wide distribution network. The strategic shift towards DTC aims to address those margin concerns and foster stronger customer relationships long-term.
what about the overall market sentiment and the competitive landscape? Analyst opinions seem to be divided, and while public sentiment acknowledges the brand's strength, there are concerns about inventory management and competition. Who are their primary competitors, and how do they currently compare?
The mixed analyst opinions aren't surprising, given the current economic uncertainties. Public sentiment seems to echo this, recognizing the power of the brand while also being aware of the challenges, like maybe holding too much inventory sometimes.
Okay.
Their main competitors traditionally include Adidas and increasingly Lululemon, especially in apparel. Both are significant players. But they also face increasing competition from smaller, more nimble brands like On Cloud and Hoka. These brands have gained traction with specialized product offerings and very effective marketing strategies, particularly in running.
Those niche brands, yeah.
Exactly. They can sometimes be quicker to adapt to evolving consumer preferences in specific categories.
Looking ahead, the information highlights upcoming product launches, like that Air Max DN with its dynamic air technology, and the continued expansion of their direct-to-consumer sales as potential drivers for growth. However, they will need to navigate the ongoing global economic challenges, any potential regulatory changes, and that intense competitive environment. What's your overall assessment of their prospects?
Nike's future presents both significant opportunities and, well, considerable challenges. New product innovation, like the Air Max Day, is essential for maintaining consumer engagement and driving sales. That's their lifeblood. The continued growth of their DTC business offers the potential for improved profitability and stronger customer connections. That's clearly a strategic priority.
Right.
However, the persistent global economic uncertainties, potential shifts in regulations, and the competitive landscape we just discussed will require careful strategic planning and effective execution. They possess the brand strength and financial resources to potentially overcome these hurdles, but it will require focused effort, no guarantees.
Finally, from a technical perspective, the data suggests watching the $55 level as potential support. If that doesn't hold, we could see further price declines. On the upside, the 66 Dixol level might act as resistance. Considering all of this, the general recommendation appears to be a hold for long-term investors who have confidence in the brand's strength and potential for recovery, but with a note of caution due to the current volatility. Some technical analysis even hints at a buy if the stock price stabilizes, but emphasizes the prevailing bearish sentiment. What's your perspective on that assessment?
I think that assessment aligns well with the information we've reviewed. The technical levels, $55 support, $66 resistance provide important benchmarks to monitor for potential further downside or perhaps early signs of a recovery.
Mm-hmm.
The fundamental picture is, as we've said, a bit of a mixed bag. You have this incredibly powerful brand and solid financial health counterbalanced by recent revenue declines and those broader global economic pressures. For a long-term investor who believes in Nike's ability to adapt and rebound, maintaining their position might be a reasonable strategy. Patience could be key. Okay. However, the current market volatility and the negative sentiment certainly warrant caution. Any new investment, I think, should be approached thoughtfully, perhaps waiting for more concrete signs of stabilization or a clearer positive catalyst.
So to summarize for everyone listening, we've observed a significant drop in Nike's stock price recently. It seems influenced by a combination of technical selling pressure and these wider global economic factors affecting their business. While there are areas of concern, such as the recent revenue decline, Nike's strong brand and underlying financial health provide a degree of resilience. It's definitely a multifaceted situation. And as always, it's essential to consider this information within the context of your own individual investment strategy and to consult multiple sources before making any decisions. We hope this has provided you with a clearer understanding of the current situation with Nike. Please subscribe, like, and comment to let us know what else you'd like us to unpack.
And what's really interesting to consider, just as a final thought, is how these short-term, sometimes quite volatile market reactions interplay with the long-term fundamentals of a company like this. It really prompts a valuable question about how much weight investors should give to each, the daily noise versus the underlying business strength when making their investment choices. Something to think about.